Hello, and this is Global Business Insights, where we look deeper at the headlines from a business perspective. Tensions may escalate as Hamas this morning said top leader Ismail Haniyeh was killed in Iran. Brent crude this morning already up close to 2%. Russia also yesterday was reported to have launched its largest drone attack on Kiev since the beginning of the war. And at the two-day board meeting ending today, the Bank of Japan raised unexpectedly the overnight call rate target to 0.25% from 0 to 0.1% in a 7-to-2 vote. It also decided to reduce monthly bond buying to 3 trillion yen, that's $19.6 billion, from the current 6 trillion yen. HSBC Holdings reported a slight decline of 0.4% in first half profits, but still beat analyst estimates. It posted pre-tax profits of $21.6 billion for the first 6 months this year, compared to $21.7 billion a year earlier. China's manufacturing activity slipped to a 5-month low in July as we saw PMIs contracting for a third month, easing to 49.4 from 49.5 in June. And the Eurozone economy grew more than expected in Q2, up 0.3%, and after it grew 0.3% over the first quarter, still a tepid recovery. The German economy, however, shrank 0.1% in Q2, undershooting expectations. The decline also reflected weaker investment in equipment and buildings. Inflation, however, in Germany also accelerated in July, with consumer prices rising by 2.6% higher than what we saw in June, when prices rose by 2.5% year on year. The US index tracking home prices in the 20 largest US metros rose 6.8% in May on a yearly basis. This was lower than the 7.3% annual gain in the previous month, but slightly higher than an expected 6.5% annual increase. Latest job openings of 8.18 million were little changed from the revised 8.23 million that we saw in May. The 8.18 in June, slightly higher than 8 million job openings expected. U.S. Conference Board's Consumer Confidence Index rose to 100.3 this month, up from a revised 97.8 in June. The chief economist, Dana Peterson of Conference Board, warned that concerns about elevated prices and interest rates and uncertainty about the future may not improve until next year. U.S. stocks were mixed yesterday as the U.S. Federal Reserve concludes a 2-day meeting. We'll bring you the takeaways from that meeting in the next episode. With the biggest stretch of big tech earnings reports looming, the Nasdaq Composite continued to struggle. Microsoft reported decent results for its June quarter, revenues up 15% to $64.7 billion, while earnings rose 11% to $2.95 per share. Still, the company's stock sank 8% in after-hours trading, they say, due to below expectations performance in its cloud computing business. Meta Platforms reports later today, followed by Apple and Amazon on Thursday. Texas Attorney General Ken Paxton yesterday said that Meta is paying a record $1.4 billion to settle a 2022 lawsuit by the state of Texas over unauthorized use of biometric data by users. And in Liberia, the president, Joseph Boakai, has suspended the central bank governor after an audit of the financial regulator revealed irregular loans and contracts. Jolu Aloysius Tarliu has been placed on leave until the review is concluded. Welcome back. For its just ended fiscal year, Microsoft's capex was up nearly 60% to $69 billion. Microsoft has been infusing its AI technology from partner OpenAI, including digital assistants called co-pilots that can summarize documents and generate computer code, emails, and other content, as well as selling Azure cloud subscriptions featuring OpenAI products. Microsoft had warned operating profits would narrow a bit given these major investments and development bets around artificial intelligence. Also, competition in its cloud computing stronghold was weighing on revenue growth. The result in the June quarter, operating margin was 43.2%, narrower than the 44.6% margin for the full fiscal year. However, strength in the Microsoft cloud sector still led to decent results, with revenue at $64.7 billion, up 15%. Operating income was $27.9 billion, up 15% as well, while earnings per share was $2.95 and increased 10%. But still, Microsoft shares fell in extended trading after it reported disappointing cloud revenue, which overshadowed stronger earnings and revenue. Microsoft Cloud quarterly revenue of $36.8 billion was up 21%. Azure, the cloud arm, posted sales growth of 29%, not bad, but still missed analyst forecasts and Microsoft's guidance for a jump that could reach a 31%. So that's a bit of an issue there for investors. Also, the technology giant yesterday apologized after thousands of people across the world reported issues with its products, ranging from email service Outlook to the hit game Minecraft. This comes less than 2 weeks after a major global IT outage left over 8 million computers using Microsoft systems inaccessible after a flawed software update by the cybersecurity firm CrowdStrike. Brent futures has been plunging. It was below $80 per barrel yesterday, driven by lower demand as Chinese July imports look set to hit the lowest level in 2 years. The geopolitical upside, considering all the flaring Middle East tensions and political turmoil in Venezuela, implies prices, if you deduct the added risk premium, should really be in the mid-70s. Brent crude, however, up close to 2% today as top Hamas leader was killed yesterday. We will update you in the subsequent episode on how all this is impacting prices. The market expects no changes when OPEC Plus meets again at its online joint ministerial monitoring committee meeting. That's on Thursday. Further weighing on investment in the industry is the new Labour government confirming that it would raise the energy profits levy, that's windfall profit tax, by 3% to 38%. This increasing overall taxation to 78%, also extending the measure by another year to March 2030. Apart from drop in demand driven by tepid global economics, the rotation from fossil fuels, given emission concerns, is playing out as long-term uranium prices hit a 16-year high as demand for the radioactive fuel soars on the back of new power generation build-outs. There is also an increasing sensitivity as price outlook dims to be more sensitive to risk factors. Total Energy, for example, recently abandoned its stake in blocks 11B and 12B offshore South Africa, despite having discovered 2 giant gas fields, citing a challenging environment to monetize the Leopard and Brulpadda finds. The US is also replenishing its strategic petroleum reserves as prices drop. Inventory of strategic petroleum reserve has increased by 8% from a year ago, according to the latest EIA data. The Q2 quarterly earnings season for energy companies looking not that bad. Total's net income underperformed the market expectations of $4.95 billion and came in at a $4.7 billion, dragged down by a 36% year-on-year decrease in refining and chemicals revenue. But BP still posted a $2.8 billion Q2 net profit, beating analyst expectations by some $200 million on the back of a lower tax bill and stronger margins on fuels. Also, despite a hefty $1.5 billion impairment from shorting parts of a major refinery in Germany next year. BP reported because of better revenues, it was able to raise its dividend to 8 cents a share from 7.2 cents in the first quarter. Chevron and ExxonMobil are both publishing their results this Friday. We'll see how they do. They're expected to deliver a 6 to 7% drop in net profits quarter over quarter. Also, Saudi Arabia's GDP contracted slightly for the fourth quarter in a row as OPEC Plus production cuts continue to weigh on the economy of the world's top oil exporter. EVI in its analysis in January had projected an average of $75 to $80 for Brent crude this year, driven by lackluster global economic activity, especially in China and Europe. The geopolitics can still present some shocks to upend projections. Liberia President Joseph Boakai commissioned an audit of 3 key government institutions, including the central bank, after taking office in January, later announcing that the central bank governor, Jolu Aloysius Taliu, will be suspended indefinitely. This came after release last week of the General Auditing Commission's report. The report, which focused on the period from 2018 to 2023, found several irregularities within central bank lending to the government, including irregularities in the way contracts were awarded. The bank's management also exceeded approved expenditure limits during the 5-year period. This week, Biden lamented that the Supreme Court in the US was overdue for comprehensive ethical reforms. The proposal he's calling for includes a code of ethics binding justices to refrain from political activity in public and to disclose gifts they receive, among other issues, as irregularities were also discovered. In Africa, the Supreme Court, the central bank senior officials, and the highest bodies and oil and gas regulatory bodies provide the institutional stability, and I think they are very much in need of ethical reform if they are to be able to discharge their roles. Not just Liberia or Nigeria, South Africa, Egypt, Kenya need to also initiate ethical reviews to establish whether rules are adequate. We tend to be shocked when we read what happened in Liberia, but this may only be the tip of the iceberg. The Liberia action is driven by a new suspicious incoming administration, somewhat similar to the situation we saw in Nigeria. Biden's initiative is being delegitimized as politically motivated, but the reality is that strong ethical guidelines will protect players not just from being tempted to stray, but will promote regular ethical reviews and independent audits, which may keep judges, central bank senior officials, and regulators on the narrower path. Asia-Pacific markets mostly higher today as investors digested latest China's business activity data. Japan's Nikkei 225 showed gains after the country's central bank raised benchmark interest rates to around 0.25%. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please do send your comments. Again, thank you so very much for watching. Bye-bye.